Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap, narrowly avoiding technical difficulties as I was trying to go live the last 3 minutes. It was not happening, but here we are. We made it. So good afternoon, Scott. Good afternoon, everybody, and welcome out. Hope you had a great day. Certainly the market had a nice day as the bulls really jumped in early on, trade optimism, right? The story of the day, of the month, of the last several weeks, and really just kept kind of running. Fed signals that maybe Jerome Powell thinking maybe we'll help the market out a little bit, just maybe, right? No hard evidence, but definitely was music to the bulls' ears today as we really saw quite a bit of buying here. Yeah, Lloyd, you're absolutely right. And good morning, sir. And hello there, Micah. Great to see you as always. Yeah, I mean, pretty much a sea of green throughout the market. We saw some milestones, taken out today too. You saw the S&P close back up above 28, which I think is at least a little bit of a positive signal. I think we still have some work to do before we're going to get too crazy, but a lot of green out there. And this is why, we talk about it a lot. We're traders. We're open to both sides, right? We've got bullish opportunities and bearish opportunities, especially in this market. The bear trades, I don't know about you guys, but they looked better. My bear trades looked better yesterday than today. But on the other side of things, my bull trades are looking pretty decent here this afternoon here. So I'm not going to complain too terribly much. On the earnings front, not a big day. We've got Salesforce reporting tonight after the close, and then you have a Brown-Forman and a Campbell's Soup coming out tomorrow before the open. Just a couple of S&P companies, certainly not small companies, but not huge names at least. And good afternoon, Amy. Good to see you, my friend. Here we are on the S&P on that 15-minute time frame. We gapped up just on some, just again, we all know that this market's sensitive to anything trade related, and Chinese coming out and saying we need to talk and we can get it done. And that was good news. We got a little bit of a movement, and then we just kind of kept moving the market here a little bit from Powell, maybe feeling a little bit more comfortable with where things are. Really, the bulls were in control from the very get-go here today and really never let go. I mean, we closed near the session highs. Want to come into an hourly time frame because on the S&P we did close above 28, which is I think a psychological win. Maybe not the biggest victory ever, but I think better than not if you're a bull at least. Kind of right at that old support level, and I'll just extend this out a little bit here. It's also lining up fairly nicely with this short-term downward trend line that we've seen develop over the course of this pullback. So we still have some work to do. I don't think we've regained our trend or anything along those lines, but definitely a step in the right direction. A few short-term signals from a bullish perspective on the hourly time frame, certainly reclaiming the shorter term averages and pushing through that 50 hourly moving average is certainly a step in the right direction. From that bullish perspective. Now we've got some challenge. We were able to close above the 9 here on the daily chart, which again is always a little bit of a win in my opinion. That 9 matters in my experience at least. So a little bit of a win. Let's see how we can follow through. We've got this support zone at 28. We've got this trend line lining up pretty darn close with it. Let's see now that we've got a challenge other than the 200-day moving average, which is pretty flat and we've already kind of violated here last week. We really didn't have a lot of resistance. So you kind of saw that on that hourly chart. We really just kind of filled up the space. Once we gapped on the open, there just wasn't a lot. So we were able to fill up that space pretty nicely from a broad perspective. So let's see how we react as we get into this challenge. That should be interesting, but we have to call it for what it is. I mean, this was a very bullish candlestick. I don't think there's any way around that. Up 500 points on the Dow, reclaiming 28. Again, I'm not going to go crazy because I tend to not go crazy, but a definite big candle here for the bulls. Let's see how we respond to these challenges. What's kind of interesting, and I was just kind of thinking as I was waiting for the my to go live because I was having some technical difficulties. And hi there, Majin, and hello there, Tanner. Welcome out, everybody, and I hope you had a good day. If we look at this on a weekly time frame, and we still got plenty of week left, right? And we're still in volatile market conditions. There's no reason to believe otherwise in my mind. If we can actually close a week in the green with a little upward momentum, this weekly candles or this weekly chart can all of a sudden start looking like a potential cup and handle. Now we've got a week before we can even start talking about that, right? We've got to get through this one first. And today was a good day, but that's all that it was, at least as of right now. But a little bit of a win for the bulls here today. If we can take out this trend line, that might be something to take a little bit of bear skew off of my view, at least, of the overall market. Now, I'm not going to get crazy until we get a little follow through. I'm just going to take it for what it is, a very solid day. But I do think we have to take note of how big of a day it was for the bulls. Over on the Dow, working back, and we did reclaim this breakdown point, still below everything except the 9. We were able to recapture the 9 EMA on everything but the NASDAQ here today. We've not made a higher low or a higher high, or yes, if I can say that, we've not made a higher low or a higher high as of right now. We still have the short-term average 20 as well as that flat 200 above us. So right now we look at the Dow, I think it looks a little more like a potential bearish retracement than a reversal. And so I think as we kind of look at the market broadly speaking, it's going to continue to give us some of these mixed type of signals that we've been dealing with from time to time over the last few weeks. I think it will remain a stock pickers market personally, at least until I start to see more evidence. But right now, it's hard to see that being tomorrow. Can be. We know the market that we're in, right? We know that tomorrow's candle can be just as red as today's was green, but would like to see some sort of slowing if that's the way it wants to go. Good afternoon, Whitney. Hi, Patricia. Great to see you guys. I hope you are doing well. On this side of things, we're just going to have to keep an eye on these short-term 20 and on that flat. I don't tend to worry about that. We've already kind of danced through that 200 flat moving average on the Dow, but I'll always just note it because it's there, right? I don't expect it to be as big of a deal as if it's rising up or rising down, as most of you guys know. But right now, a little bit of a win here today, recapturing the 9, pushing back up above that breakdown point. A lot of things that had broken down last week or even yesterday were able to kind of push back, not to reclaim higher highs or necessarily moving averages, but did kind of push through the breakdown points that they had either taken out late last week or yesterday, depending on the stock. So I'm going to keep an eye on those averages, but catching this 9 is a good start. As many of you guys know, once we kind of start seeing this 9 work up, then that can start to act as a potential support catalyst for us. We have to get above it before that can happen. Well, today, for the first time in a little while, we've been able to do just that. A good question, Majin. Is a reversal the same as a retracement? I don't think so. Personally, I think a retracement is just expectation. This isn't an upward trend, whatever it might be that we're looking at. We're in an upward trend. So looking at the NASDAQ here, since that's where we're at, and we pulled back here, it just seems like a normal part of the process. And a retracement is basically this short-term downward movement that we're seeing within this longer-term up movement is just some intraday noise, some profit taking, but the expectations or the trend are going to continue. So when you're thinking retracement, it's, to me at least, it's basically the shorter term trend is going against the longer term trend, and I expect the longer term trend to win, if that makes sense. And so you can kind of see that, anytime we're in a nice upward move, and then we have a little bit of a downward move, but then buyers step right back in, and that's kind of how we set up a trend. These retracements are just kind of the normal ebb and flow, if you will, whereas the reversal is where we actually are seeing signals coming out of a downward movement. So we've seen, a lot of things in healthcare recently doing things like that. And so like an Anthem, just as an example, where we were in a very clear downward move. At this point, if we're looking at Anthem back here, I'm probably realistically, I might have said we caught the 9 and that's a good thing. But realistically, I'm probably thinking that this is more of a short-term rally within the longer-term trend. I expect when trouble develops, it to start to continue to move to the downside, kind of like it did back here, kind of like it did back here. So expectations are this is a retracement. Well, this retracement ends up turning into, at least potentially, a reversal when that retracement gets taken out, right? And so when we saw this break here, we now have higher lows and higher highs. So it appeared to be a bearish retracement. Maybe this, I don't know, you may or may not think this is a great example back through here, but it looked like it was a little bit of a retracement. Maybe I even got short, or maybe you even got short. But our whole logic was, well, now that we've got our entry into this bearish trade, we feel like we've got this, swing high working as our resistance. So when that ultimately gets taken out, maybe we have to take a little bit of a step back. We can look at a very similar situation on the S&P right after Christmas. We were in that big downward move. Everybody I know, myself included, we're looking at this as a bearish entry point in the market. We'd been in a downward trend for quite some time at that point, had a little bit of a rally, looking like a retracement, a short-term upward trend within the longer-term downward trend. A lot of people, probably most of you, I would imagine, most people I talk to, and myself included, we're looking at this as a bearish retracement opportunity. But then we created that higher low just the very next day, our post Christmas rally that we got going on here, where we created that higher high. So basically, that's what's happening in a retracement versus a reversal type of a pattern. Retracement's kind of continuation of what is normally happening, what is currently going on, whereas reversal is actually a shift of gears, if that makes sense. I hope that does help you out there, Majin. A really good question, and certainly a good one to talk about. So I hope that does give you a little bit of clarity on that side of things. And so that's why right now, you look at something like the NASDAQ and we're not quite seeing those things, right? They may develop and it might just go straight up, right? That can happen. Let's wait till we see the utility sector today. If you don't believe me, we can see V-shaped recoveries. You guys probably caught that already, but it was pretty crazy over in the utility sector. Right now, it still looks to me that we're still making lower highs and lower lows. We haven't done anything to reverse that trend yet. So right now I expect some upward movement, and then when we start to see some selling, the longer term trend, which in this case is right now to the downside, to prevail. Looking at where we are, we do know that we had a little support that caught us yesterday. That's kind of that last line of defense here in the NASDAQ. And as I'm continuing to be open to bullish trades, and today didn't do anything to make me change that stance, certainly, I'm not going to be, broadly speaking, looking at that within the technology sector. That'll still be an area that I'm shying away from, at least as of right now, and certainly as a whole. Individually, maybe we can talk about certain stock here and there, but collectively, I think the tech's going to have some work to do. And we see that in the NASDAQ. We were able to kind of rally back above that 200, but we're still below that 7,200 old level of support and resistance, still below that 9 EMA, whereas the other indexes were able to recapture that today. Today, we've seen lots of days like this on both sides, right? Where the ball just gets rolling and everything's red, everything's green. And when we have days like that, well, pretty much everything is the same, right? And so, we kind of were drug along with it. The strength of the market took the NASDAQ with it here today, in my mind at least. So we've got plenty to worry about here until we recapture 72. I think you have to be very cautious. And if I'm looking at any bullish opportunities going into the second part of this week, like I said, it probably, as a broad statement, probably is not going to be over on the technology side of things, for better or worse. 72, the big line in the sand. If we see, if we start to see some slowdown and some signals at 72, maybe it could open up the door for some interesting bear retracement type of plays on some of these tech stocks that recently took out some support levels. It's not all doom and gloom by any means, but there are plenty of companies in tech that are looking awful weak, at least in my mind, and certainly not strong. If nothing else, you can look not strong as well as weak. So. Over in the rut, good solid day, closing back above 15, which again, if nothing else, a psychological victory. We do know we have some price action, not a ton, but we've had some price action there, kind of working back above that 15. Lots of work to do all over the place. Lots of resistance. Our most notable one is going to be right about 1520, 1525, that recent breakdown point. So that'll be an area that I think we can keep a close eye on for a potential resistance catalyst. If we're able to push through that, then all of a sudden I think we can start talking about neutrality back in the Russell once again. On the support side of things, again, I think we can use this low that we set up here on Friday and yesterday as that low. That puts us right about 1455. So on the with the exception of the NASDAQ, S&P closing back above 28, the Dow Jones closing above the breakdown point, Russell closing above 15. They're not necessarily huge things. I don't think they're great flashing buy signals by any stretch, but I do think they are bullish in their nature, personally. And so I think, for me, any continuation of this movement is going to take a little bit of that natural bearish bias that we've been building really over the last month, and going to just take a little bit away from it. Still open. I think we absolutely have to. I don't think we want to forget to what kind of a market we're in, right? That could have been a tweet and we could have had a down day just like this, and we all know that. But it's certainly a little bit of a technical win, in my opinion, at least, for a lot of the indexes. The NASDAQ notwithstanding, it's got a little bit more work to do, I think. One area that really shined here today, again, a sea of green, it's all relative, but we saw that great candle. We actually saw those little signals yesterday in the material sector closing above not only the 9, but also the 20 and that 54 support zone. A ton of follow through. We gapped up on the open and really ran, showing quite a bit of strength in the marketplace. Like, you guys know me and my APD. I always am looking at APD. They kind of right into resistance right on the open. I hurried and snapped a picture and threw them over on the Tackle Twitter if anyone was interested in seeing them. But a nice little breakout over in APD. You had another breakout over in Lin here as well. Very clean breakout. 2 really solid days. We've talked a little bit about this, and it's one of those mixed areas, and I believe it continues to be so. But just like we've kind of had a little bit of a back and forth between open as a bull, open as a bear, sometimes skewing one way versus the other, I think we're kind of still in that same type of a ballpark. Another breakout on Echo Labs. That's a good looking breakout in my opinion. You still are going to have things that look more like a retracement, a bearish retracement, or at least potentially on something like Sherwin-Williams, but has recaptured those short-term moving averages. Even a PPG who broke down here late last week, lucky for me, didn't follow through and hit the entry point on Monday. Wasn't the there were a couple that looked like that in my world this week, but really that breakdown's gone. Right at this point in time, that breakdown is a failed breakdown. We're back into neutrality. We're still going to have, things like Lib, who's kind of got to deal with this old breakout down point themselves, but just looking a little stronger. We saw, the Newmont really showing a ton of strength late last week. That's continued to carry into this week. Certainly an area that I'm open on both sides. That has not changed. I think at this point with kind of the big players, you almost have to start to kind of swing it a little bit closer, at least, to the bullish side of things. Still have to be cautious in any bullish activity, I think. But I think that was a good step and really great follow through off of yesterday's move. And that's why, always looking at that, closing above that 9 and recapturing that, flipping that thing around. That's not necessarily easy to do. And so it is a little bit of a show of strength or weakness if we're going to the other side of things. Now, on the other side of things, it's the energy sector. It had a nice day here today, too. Certainly not one of the strongest areas, but up nearly 2%. So certainly a good day at the office for energy. This continues, though. This is going to be a bearish retracement area for me, for better or for worse. I'm going to be waiting for those sell signals to develop later in the week or early next week in the energy sector. If I'm a buyer and there's things I'm interested in, there's probably things you guys are interested in, it's not energy for me, right or wrong. There's way too much weakness within the sector overall. On the actual ETF, I think we can kind of look at that 61 as that first level of support, but breaking above that, wouldn't really even budge me. We're going to have to break back above 63 before I start having really any personal bullish bias overall within the energy sector. I'll be looking at the energy sector for a retracement in the days ahead. Not going to be, again, if tomorrow's just a huge red candle, it's going to kind of be a bummer because that's not going to be a great setup opportunity. But if we slow down a little bit, small body candle, into the next couple of days, could be an interesting area. If we're thinking about this as a bull, we just have a lot of work to do, right? Still in a bearish retracement phase, at least in my mind, on Exxon. Chevron, you could argue that we've held that support level, had a little bit of a fake out, and fair enough. I think that's a fair argument. Can't really make the same case, I don't think, with the ConocoPhillips. You have the EOG kind of just hanging at a support zone. That's kind of the last line for a little while. Oxy, it just doesn't matter anymore what's going on. They just always seem to drop. SLB kind of hanging right at a support zone as well. So about the only things that have held up okay in energy lately have been the midstream companies like the Kindred Morgan here. They've held up okay. Everything else has really, really struggled. And in my eyes, at least, the charts are either clearly bearish or neutral with a side of bearish for the most part. I'll continue to be looking at the energy sector from that bearish perspective personally. And I think, it was kind of beat up. A little retracement is not a bad thing, especially for new potential entries. Saw some great movement in the financial sector here today. We've all, you guys all know how I feel about this sector. I still like it. I've continued to like it. It's been one of my bullish areas during this last, relatively bearish month. I've really shied away from the banks, and I haven't changed my tune necessarily, but we did see a little bit of decent movement today. Now, JP Morgan's right at a test zone, right? Testing all those moving averages, that old resistance zone could easily turn into a bearish retracement, but we held support on Bank of America. Again, is that a good looking chart? I wouldn't argue it is, but it's certainly not terrible. Wells Fargo is back kind of in that same retracement, testing that old breakout zone. So a little bit more movement within the banks. Maybe we can start to feel a little bit more confident in the sector as a whole. I'll continue to be very cautious with the banks. That's not going to be the area that I'm looking at. I'm going to continue to look at the brokers, the ICEs of the world, who just continued, it's nice little break from late last week. We broke out on Friday and then, kind of confirmed that. I guess we broke out on Thursday and kind of confirmed that. The insurance like CB, not the greatest day today, kind of sold off of the highs. I'll continue to look into those areas. You actually saw MasterCard work down, below the 50 yesterday, but actually has held that support level. Still more neutral, not the type of chart that I'm looking for right now, at least, but just strength. And it's felt that way, that it's been relatively strong throughout the course of this entire sell-off. It wasn't until the banks really started to struggle that the actual ETF started to look a little bit questionable, right? But on the ETF itself, we're kind of smacked right between these moving averages. Any upward movement, that's going to look like a really, really strong support bounce and potential pivot. Now, again, is the trend great? No, I don't think the trend's great. I doubt most people do, but it's still, if we look at it from a larger time frame, still, has the characteristics of an upward trend, at least in my opinion. So an area I will continue to skew a little to the bullish side in personally. Industrials, really strong day here today. Just like the Russell, we're going to have lots of little things, right? Lots of little layers sitting on top of us. I still lean towards the defense companies as the area. If you're looking at things from a bullish perspective, they seem to have held up the best, not just today, but really this entire stretch. We've seen Lockheed, we've seen we've seen Northrop, we've seen Harris and LLL. So many of those defense companies have continued to show great strength. You had new highs. I think you hit new 50 highs on both Harris and on level 3 on LLL here today as well. So this continues to be a pretty strong area, probably the area I'm thinking for the bulls, at least from in the industrial sector. Again, a lot of these things are still going to be looking a little on the sketchy side, though, and could be opening up the door for some potential bearish retracement opportunities. You've got Cat, who's just kind of hanging and doing his little dance. We did see some good movement in the things like UPS and whatnot today, and some of the transport type of companies, but they've still got a lot of work to do still, in my mind, with the exception of recapturing the 9, clearly in some downward trends. Of course, we talked Lockheed, strong movement over there. So we're still going to have, I think, opportunities on both sides, but with us climbing back above that 73, which easily could have been a breakdown point, maybe it still is, I think we have to call that a little bit of a bullish signal overall. Of course, we reclaimed the 9 just like we did that in most areas here today. That doesn't hurt either. Lots of things, though. We have to probably look at our next level of resistance. Obviously, we'll want to keep an eye on that falling 20, but 75, 76 probably worth noting, or just shy of that at that 50, 77. Probably the next level. So right now, again, some mixed signals here, still in that downward trend, still have made lower highs. I'll just steal that for just a minute. So easily could turn into a bearish retracement, but there, just like there has been really for a while now, are still some nice bullish areas within this sector. The waste management companies didn't necessarily have the great day today, but their trends for the most part are still continuing to remain intact. Over in staples, kind of one of those solid days. Oh, we skipped over tech. Well, let's not do that. That was a big day. Now, we had a ton of movement to the downside yesterday in tech. So certainly as buyers started hopping in, they were not unwilling to buy into some of the cheaper deals over in the tech sector. Again, much like the NASDAQ, though, we've got a lot of work to do. We did reclaim 72, which I think you have to call a win here. Nothing else, let's recapture this breakdown point. Then maybe we can talk what is ideal if this is going to be kind of a reversal point in the market, and I think that's very premature to say that it is at this point. I think the trend still says you be very, very careful if you're a bull, but what we kind of want to see is we want to see that pull back and then that failed retracement, right? And then another run giving us those higher highs and higher lows type of deals. We're going to need some time for that to develop. And specifically when we're talking tech, that is what I'm going to need from that bullish side of things. We saw that Microsoft break down. Now we're testing the breakdown point, but just going back above it, maybe we're back in neutrality. Certainly wouldn't call that a great bullish signal. We've all seen Apple many times in many places. That chart doesn't inspire confidence. The MasterCards and the Visas were able to hold support, but again, maybe back into neutrality, a lot less. They're super bullish. Even the Ciscos of the world, who had that big solid move on a really good earnings report, come back, some upward movement, but again, maybe neutral to me at least. Adobe fired back a little bit here today, but still very ugly looking if you're talking about a buyer. So I continue to be very skeptical about tech. And as far as selling is concerned, probably one of the areas that I would be more likely to be looking into. Buying side of things, I think there's a lot more reasonable places. Whether I'm right or not, I feel that there's a lot easier places to try to go after. So many of those tech charts have just really taken a turn, and until we start to recapture some trend there, I think we've got to be careful within that space. Definitely going to need to see the semiconductors start to pull their weight a little bit. That would help too. So they had an okay day today, just like everything else, but we've seen how ugly so many of those semiconductors are. Although AMD is kind of knocking on the door of a potential, I guess you could argue at least a potential breakout. Just not a lot of resistance beyond this $30 swing resistance level that they have. So that's more of the exception to the rule of how some of these semiconductor companies are looking. Probably need them to get on board before we see a really turnaround in tech. I have a hard time seeing tech really turn around without the semiconductors at least trying to show some strength. Over in the staples, a little bit more movement here today. Again, at this point in time, I'm just calling that break that we saw on Friday as just kind of the way it was with the nature of the beast on Friday on this ETF. We did break that support, and it's hard to spin that as a positive, but I'm just, that was also a matter of timing, right? That's what the market did, just like everything was up yesterday, and the timing does matter, I think, especially when we're talking about these ETFs. So I'm still looking at this as a bullish spot. If we're going to see a rally in the market, even if it's just a short-term bearish retracement and nothing more, which I think is probably how we should be looking at things right now. If we're looking at things from a bullish perspective, maybe we can see a little bit of a rally. Broadly speaking, stocks are pretty beat up. They spent most of the month of May working their way down, but we still haven't recaptured trends. If we see that, maybe we'll see a little pause in the staples during that phase of things, but still an area I think that for the most part, we have to like, certainly more on the defensive side of things. We did see PG able to hold its support zone here today. It's got some work to do, but at least it was able to hold support, kind of like the credit card processors. Coca-Cola, Pepsi, both of them are knocking on the door of breakouts. The tobacco companies now, they're not looking all that great. Philip Morris, not looking all that hot, looking like a bearish retracement. MO probably even rougher, working right into that old support zone. So not quite as strong as we had seen it, but I think for the most part, we are remaining in a bullish spot overall within the staples, within the staples sector as we're kind of moving forward. Now, probably the most interesting day today was in the utility sector. I don't know if you guys caught it, if you watched it or not, but check out this candle. So basically our top to bottom candle, we're all the way down to support, all the way up back into that resistance today. Look at this on the intraday, and I might have to do a 5-minute chart to do it. 15 will do it justice. So on our open, as buyers are looking for the more aggressive beat up areas, we are just selling utilities so we can buy some cheap tech, so we can buy into basically everything else, right? And we just zoom all the way right down. I mean, it was fast and it was furious. I mean, these are 15-minute candles, so it didn't take very long before we got back into that swing low and then complete V-shaped recovery. Basically just almost as quickly as it happened, we worked our way back up into that resistance zone. So basically no harm, no foul today on the utility sector. Support held. We're still basically at the same price we were yesterday at that resistance zone. Again, if buyers are looking to come into the market, if we're able to carry this momentum forward and break through some of these resistance zones that we still have to work through, maybe that will be a reason to look to other areas in the short term versus utilities. But I think you still have to like utilities as we're moving into this market. The trends are still very much intact. Today was a pretty darn weird day. It made sense technically. It just happened pretty darn fast within the sector. Would like to see us get back above that 59. Again, we kind of talk about this. The first time we break, it's a bigger deal than the second, right? We've already shown that we were able to break through it. We're all able to break down back below it. So 59 is not the same strong level that it was pre-breakout, in my opinion. But I'm going to feel a lot better when we get back on the right side of it. I continue to look at the utility sector from a bullish perspective, and just pushing back above that would make me feel a little bit better. Over in healthcare, nice follow through off of this support bounce. We held this support last week, one of those areas that held support last week. Follow through this week as well. It continues to be an area that is intriguing and certainly has seasonality on its side. Tend to do okay within the healthcare sector during the month of June. Still kind of more in a neutral type of a range. But we've seen so many things. One of my favorite setups is Lilly, that's developed into a K trade, right? Either break to the upside, break to the downside. And I'm sure most of you guys know the K trade, but just in case you don't, all it is if we break to the upside, it's a bullish signal. We break to the downside, it's a bearish signal. Sooner or later, we're coming out of this range. Doesn't have to be immediately. It can be a while, but eventually that will happen. I think this is a really fun one to watch and kind of, a really good reflection of the overall sector. There are potential breakdowns and potential breakouts. We've seen some of the stronger movers. We saw that Anthem here today, certainly somebody who's been on my radar, still trying to break out, still showing those reversal characteristics, but not able to push through. But we saw, things like Merck, that really had that little pullback after breaking out, creating those higher highs and higher lows, continuing nice momentum. Even things like CVS, you know, you almost have to start thinking K-trade with them as well, you know, as we're kind of really, we've all known this floor. I've been watching this floor for a breakdown since back here. So I know many of you guys probably have too, since back in early April, but now we've developed a ceiling as well. So it's a really interesting area. I think we can continue to look at it from both sides of things, but I skew actually a little to the bullish side right now, personally, in the healthcare sector overall. You do have things like Johnson & Johnson, who potentially could be setting up for an interesting bearish retracement opportunity after breaking down on bad news or kind of testing that old zone. No confirmation candle yet, but certainly a price-wise would make sense if this is where some of these short-term buyers came out of it. So certainly some interesting developments pretty much across the board. You have Pfizer knocking on the door. You actually had MDT here today actually break some resistance. I'll do it live. I'll draw a breakout line. Pretty straight. Not the greatest breakout in the history of breakouts, but we did break resistance. So I think for the most part, there are a few more reasons to like healthcare right now than to dislike it. One of the areas that I am most open to bullish trades sector-wide, starting to feel like it's simmered down, starting to feel like an area that you can like a little bit more. There's still going to be bearish opportunities in it, though. Make no mistake about that. Just maybe not as many as we've grown accustomed to over the last few months, maybe, of seeing within that space. Nice movement in the discretionary sector here today, recapturing 112, which is a good thing. Again, at this point in time, we've made these lower highs and lower lows. Going to need to see that retracement and see where that one takes us. Does it take us to a new low, or does it create that higher low and then create that higher high for the signal as a whole? Now, for the most part, this area, I don't really mind. We just, I think, have to look at it, not collectively. I think we have to take it on a case-by-case basis. We've all seen how beat up the retail has been. They've had a decent bounce back the last couple of days, but those trends are still predominantly very bearish, in my opinion. So they're dragging it down. Amazon breaking down is the biggest component of the ETF. That's always going to hurt. It's hard to get excited about that Amazon chart unless you're a bear and waiting for, and you took the breakdown late last week maybe, but certainly not a great looking chart. But you have the Home Depots that are at least putting up fights. I don't know that this is a very easy area to trade right now in Home Depot, but showing well. McDonald's still knocking on the door of that 200 breakout. One of these days, it's either going to throw in the towel or it's going to break out. But I promise you, whenever it does, I'll share the chart if it ever does break above $200. Even a Nike that had broken down, kind of working back into those moving averages. Not a great look. Starbucks, though, we've talked about them. They were dancing on that 50 pretty much all week. Very nice movement today off of that. You have the Target, who's just been pretty awesome as a whole lately after a good earnings report, doing really good things. So we just, I think, have to be careful, in particular on the retail side of things. Those charts are just so beat up. Is it XRT? I always forget the ETF because it's not in my automatic list, but the retail, that's a pretty ugly looking chart. Could be a very interesting bearish retracement area if we see a little more upward movement in the days to come. On the other side of things, I mean, it's hard not to look at Starbucks and say, yeah, that's holding trend. That's a very interesting. It's hard not to at least tip your hat to Target and all the strength that it's been showing, not just today, but really ever since its earnings report. McDonald's, I mean, we've been fighting at that for what seems like forever through, all sorts of market conditions. So an area I think we just can continue to be stock pickers in for the most part. Do think we have to be, little skewed to the bearish side on the retail side of things, if nothing else. Other areas or other components of that sector, I think are looking perfectly reasonable, still from a bullish point of view. Again, just kind of like everything else, just a few more things are going to probably be looking a little more bearish than bullish. I don't think today changed that dramatically enough to kind of flip that, at least as of right now. Although, for what it's worth, no S&P 500 companies hit new 52-week lows today. And around 20, I think it was 25, hit new 52-week highs. So it was the first time in a little while that no S&P companies put in a new low, new 52-week low here today. So show of a sign of at least today's strength. Over in the REITs, another back and forth day, kind of had a utility type of vibe to it. Didn't really kind of have quite the same exciting candle, a little more choppy type of a deal, but holding up, holding our own. And again, my guess is, as we're moving into more risk on, at least today, the market figures the Fed's going to save them. The trade war stuff is behind us. Whether those things are true, well, I'll let you be the judge of that, or time be the judge of that. But that's how the market was feeling today, one way or the other. And hey, Em, great to see you. And so not a huge surprise that the boring dividend payers, weren't the winners today. The REITs, the utilities, although, man, that utility chart is pretty crazy to look at, on the intraday level. So we're still kind of in the same spot, much like utilities, still looking at this from an overall bullish perspective. But if we are going to see a retracement to the upside, even if that's all that it is, maybe these are areas that will be left behind a little bit during that phase, as some of the other more exciting, if you will, quote unquote, exciting sectors will get could potentially get the love during a little bit of a rally. Still like it, much like utilities. I'd like to see us kind of push back through here, but we did see quite a bit of profit taking in this space. Let's actually pop over into the REITs very quickly. And hey, Pascal, great to see you here today. On both PSA, but in particularly PSA had that really nice pullback that we were looking at last week, as did Well kind of gave it all back, right back into support here today. So a little more profit taking in there. And was it just from because of the type of day it was in the market? That's what I think it was. Whether that's what it is or not, time will tell. But as we look at the ETF and the area as a whole, I still think more reasons to be liking this sector as a buyer than as a seller. Not anything has changed from my perspective overall there. And then lastly, over communication services, kind of got in with the flow today. But the simple truth is, as everybody here knows, Facebook, hey, it's holding that support level, but there's some bad news going on Facebook and Google. And when Facebook and Google, in a weird way, XLC is a weird hybrid child of Google and Facebook, because it's so weighted towards those companies in both classes of shares. In the case of Google, that it really is going to go with Facebook and with Google. This chart doesn't inspire a lot of confidence. We did hold that 200-day moving average here today. That's a plus, but that's about as much as I can give it. Hey, we held the 200-day on the day that everything was green. So congratulations for not being horrifically bad, Facebook, I guess. Google certainly not looking any better, probably looking a little bit worse after the antitrust. Anytime antitrust gets thrown by your name, it's probably not a good thing. An area I think we have to be careful as we're moving forward. Not an area that I'll be looking at from a bullish perspective. Although you did see a Charter today, it's not all a lost cause, kind of pushing through a little bit of resistance. If you go back a little further, they've kind of got another level. Well, let's just go to a weekly chart so we can actually see it. A little bit of overhead kind of sitting right above them, but a very strong overall move here today within that space. If nothing else, Netflix, said that I'm not confirming that breakdown from yesterday. Now I'm just looking like a bearish retracement. I guess a win's a win. EA still dancing on support, but could give, with the market, could easily give. So an area that, much like tech, to me, it's not a great buyer's market, but there are things to buy, just like there are things to sell. And I'm going to be picky. And I think you should be picky too, whether you agree with my version of it or not. That's your call. And so I certainly respect your opinion. But, I don't feel like these companies are the ones that are holding up, that have given us at least technical reasons to still believe. as we're moving forward. So very interesting day in the market, plenty of bullish movement. Let's see how we respond. Let's see if we can actually, let's pop back into the S&P one more time. Let's see if we can actually follow through, get cleanly back above that breakdown point, cleanly above that downward trend line, and then we can kind of start talking about things. We've not really won a fight on the S&P 500 since this began, right? We've ran into resistance here and lost. Got to support and broke down, held at the 200 for a couple of days and then broke down. So we've not won a fight in the S&P. At least the bulls haven't won a fight. The bears have won plenty this last little while. Let's see how they respond. They kind of got the early points. They were spotted a few points early with today's price action, but let's see what they're able to do with it. So don't think we want to get overly optimistic that this is the bottom. I don't think there's any great technical reason to believe that today, but we did see some subtle bullish signals, at least in my mind, to make us okay. Let's be open to that that idea. But hey, there's been lots of great bullish trading opportunities, even amidst the selling that we've seen, right? So that's always, or at least most of the time, maybe not always, that's the case. Over in the VIX, as you can imagine, a 500-point day in the Dow Jones is going to lead to a pretty big red candle over in the VIX, not really making anything of it at this point in time. If you think that the trade war stuff is a thing of the past, you're braver than me or wiser than me or crazier than me. I'm not sure which. We're still in very volatile markets. This could easily gap down early, gap down on the open tomorrow, right? And certainly would probably not surprise a single soul here. So over in the dollar, continues to hold that 97. Not looking particularly great, but we are holding that 97 zone, which I do think is at least a fairly important support zone on the dollar right now. If that gives out, I do expect more selling in the dollar, potentially even into that 200 period moving average, and that would be a little bit of a concern. On the other side of things, support still continues to hold. I maintain the same thing as always. I continue to have a bullish skew, but I'm just waiting for the same thing it feels like I've been waiting for forever, and that is that nice clean break. And whether this is a pullback opportunity or something else, I don't know, but I guess I don't really care all that much, because until we get a weekly close above these highs on that weekly chart, I'm not an intraday trader in the Forex market, so I'm just kind of letting it do its thing. If this gives out, though, really we don't have a lot of support till we get into that 97.60 or so range, which is going to line up pretty closely with that 200 moving average. Now, if we pull into the 200 and see some buy signals, maybe something that I would be interested in taking a closer look at from a position trader perspective, or at least a swing trading perspective. But we've got a little bit of room, and if we're having that conversation tomorrow, well, it's not going to be that day anyway, right? So on the other side of things, probably need to reclaim that 50 to get some bullish sentiment really back into the dollar. It's going to take some buyers coming in. Dollar has been pretty strong lately. For the most part, traders have looked for opportunities to buy into it, even though I haven't always agreed with those entries. Most of the time, those entries have worked. And so I haven't disagreed so much as just not agreed. So probably, for me, not much to see here. On the other side of things, probably to get some nice momentum, would like to see it kind of reclaim that 50 period moving average. Not much action here today in gold. We did continue to kind of hold above that 1325 old resistance level. Here today, we're up, right? We're very up in a very short period of time. I'm still liking it. I think what we would need to see is either some sort of a pullback or some sort of consolidation for new entries into the gold market at this point in time. Very, right or wrong, not particularly fond of jumping into it this quote unquote late. Not that it necessarily is late. I think we can be patient and wait for a decent setup for us. Really strong movement. Held our own today in a day where everybody was buying stock, and gold was still able to hold on to the gains that is picked up. A little bit of a pullback, or letting this 9 kind of consolidation, letting this 9 catch up, would be a pretty nice thing to see from an entry perspective. We're a few days away from that happening. Resistance, of course, still going to be up here right shy of that 1350 where we peaked out there before. And then you can choose your support, how much you want to, how much you're looking at. We look at this breakout point. Do we look at our breakout on this swing level or this swing level or the 50-day moving average? There's lots of things that could potentially act as support catalysts if we do see a little bit of a pullback in the days to come. Over on silver, a little bit of a similar price action, but again, like I've said many times, at this point in time, I think gold has a much stronger argument from the bullish side of things. I think you have a much stronger leg to stand on, although I don't think it's the greatest leg, that this is more of a bearish retracement opportunity developing here in silver. So not a lot has changed for me. Still looking at silver as a bearish perspective, pretty much have to break back above 15 before I'm interested as a prospective buyer. No reason to think tomorrow has to be the day. We do see some conflicting signals. We have reclaimed the 9, broke the 20. So we're seeing, and this little trend line that we've developed, but we've still got some major long-term moving averages sitting above us. And when we look at this from a weekly perspective, still looks like a little more of a retracement than a reversal. Let's see if we can recapture that weekly 9. Maybe you can change my mind, but that's what it will take. Over in crude, a little bit of a day of breather, just a little doji type of a day off of yesterday's selling. Again, much like the energy sector, at this point in time, it's crude is bearish or pass for me, at least. Don't really have a lot of support until that $50 mark. Ideally, maybe we see a few days of building the floor and then the break to the downside, like we were so accustomed to, ceiling and then break, ceiling and then break, ceiling and then break on the upside. A little bit of a retracement would be okay too. All the way up into that falling 9 would be a perfectly interesting bearish retracement that could be very intriguing to me, at least. Right now, just a little bit of a pause here today. Nothing really new, I don't think, to report over in crude. And natural gas just kind of hanging right at that breakdown point, much like crude, a little bit of a doji day. Not a lot of reasons to change your stance, in my mind at least, over on natural gas. Still looking pretty bearish after taking out that major longer term support level here, whether it was yesterday or late last week, depending on where you had it. So, ladies and gentlemen, that's where we find ourselves. It certainly wasn't boring. Bulls really came firing back in today, and I do think it's unwise to just shake it off and say, man, not a big deal. But at the same time, I don't think we want to get overly, oh yeah, this is the bottom. This is the time we have to get in. Maybe it is, but we're gonna have plenty of opportunities if it is to get in the days ahead. So we don't have to make that decision tomorrow. It doesn't have to be all in or all out, right? There are going to be interesting opportunities on both sides of the coin. It's going to open up the door for some potential bearish retracements. While there are not going to be a lot of great examples today because we see all these giant red or green candles, tomorrow, a little bit of a doji, a little bit of inside candles, we could be looking at some interesting bearish retracement candidates. So I think we just need to continue to remember that there's opportunities on both sides of the aisle right now in the market. It's fast moving. It's still volatile. Any given day, nothing is really that surprising anymore, right? So nothing has changed on that side of things as we're moving forward. Ladies and gentlemen, that is going to do the market recap for today. But as always, thank you so much for your time. Always great to have you with me, and thanks for going through the daily routine with me. If you are new around here, be sure to subscribe to the channel and hit that notification bell. And of course, if you haven't had a chance already, head on over to Tackle Trading. We can get you and get set up for that step webinar. That's tomorrow. We don't have much time left. We'd love to see you over there. We're at full capacity, I hear, or we're about to be there. So if you haven't had a chance, you just head on over to tackletrading.com and we'll see you over there. Should be a lot of fun, very informative. We're all really excited about it, and I think you guys will be as well. Of course, it is Tuesday, which means for our pro members, we have our coaches show this afternoon or evening, depending on where you live. It's 6:30 here in Utah for me. So that should be a lot of fun. So enjoy that to all of our pro members. If you're not a pro member, we of course always invite you to head on over to Tackle Trading, and we will get you set up with a free trial so you can come see what it's all about. Let's see other things. Be sure to head over to the Tackle Instagram too. We've got and get your vote. We got a few options up there for our analyze going into tomorrow. So should be interesting to see. I'm not sure who will do that one, but should be a lot of fun if you haven't had a chance to do that. Of course, join us over on Twitter at Tackle Trading. You're always, of course, welcome to look me up at Frank Martin 23 over there as well. Let's see, anything else? Boy, that was a long list. But I think that's everything. That's all the housekeeping stuff. I usually will forget something, but such is life. But thank you so much, guys. It's always a pleasure spending some time with you. Thank you for joining me. Enjoy the Coaches Show here this afternoon. Enjoy your Tuesday night. I will see you same time, same place here tomorrow. Thanks, everybody. Bye now.